Good, dude. Good. I have to say, this is going to be one of those iconic White Knuckle Report episodes where I give you information that will literally change your life if you execute properly. So we're looking at monthly candles today, okay? Because it's the end of the month. So we got that data. Let's just look at it. What do we see on Bitcoin? We see a monthly close above the 236. Very positive. We've already talked extensively about how Bitcoin is really establishing a strong uptrend. It's in a bullish formation. It's at least somewhat safe to say that the bottom came in November under the lunar eclipse. So moving forward, let's look at some of the other indices and see what we can derive. So S&P 500 on the monthly chart. This is what I want to draw the most attention to here. We are now closing a monthly candle above the 0.5 Fibonacci level. So we're entering that golden pocket area. Now, the golden pocket area is essentially between the 618 and the 786. That's why the 702 is such an important level, because it's basically smack in the middle of the golden pocket area. Now, obviously, this could get stopped at the 618. That would make sense. That happens a lot. There's a high probability of those types of reversals. But the thing I really want to draw attention to that's quite interesting here is that the S&P 500 closing monthly candle above that 0.5 level is confluent with the DXY closing a monthly candle below the 0.5 level. So everything I just said about the S&P 500 applies to the DXY inversely, okay? Like they are at the same levels relative to their Fibonacci structures. One of them just happens to be inverted, and the inversion is the DXY. So the point is the DXY is starting to target that golden pocket area. The next level we could expect for the DXY to find some support is going to be around that golden pocket, going to be around that 618, that 702, that 786. So that tells you that in the near future, like very, very near future, I think there's a very strong possibility that these markets continue to rise, and they continue to rise into an area where we're going to see some major global macro thing occur that's going to turn these markets around. Because what's important to understand here is these golden pockets, these 618s, these 786s, these 702s, these are reversal points. And the fact that the market has showed strength all this way up through the 0.5 Fibonacci level, it's telling you that the next logical resistance is going to be in that golden pocket. So then we start to consider, okay, well, what's taking shape on the world economic stage? Well, a ton of things. You tell me, which one do you think is going to make shit hit the fan? I don't know. It could be the debt ceiling. It could be war. It could be anything. I don't even really need to know. All I need to know is that there are a lot of macro factors that can put downward pressure on price. And price is approaching an area where there's a high probability of a reversal. So the question becomes, what do we do here? Do we chase this to the upside? Well, no, of course not. Have I been chasing crypto? Have I told anyone to chase crypto? No, you don't chase. No, you wait for an obvious gut-wrenching pullback. And that's kind of what I'm trying to say here. There's an obvious gut-wrenching pullback that is, I think, somewhat imminent. But before that happens, I think markets can and likely will rise. So the targets are clearly defined. They're in that golden pocket area. But what would be the trade if we don't want to necessarily chase? Because there's no guarantee that the markets are going to rise. Any of these global economic nightmares could take shape at any minute, right? So it's not safe to chase here. So the opposite would be true. This is now when you start accumulating some short positions. So this is where the trade of a lifetime starts to take shape, because it's a double whammy. You're going to short this market in the golden pocket area, and then all the money that you make shorting this market in the golden pocket area, you're going to use that money to buy cryptocurrency. Obvious, right? Because I'm talking about a gut-wrenching pullback here, right? So all the money is going to be made on the downside, but we've talked about that these markets have established what looks like is going to be an uptrend confirmed here. And that's kind of what you see on the monthly chart of the S&P 500. So if the markets are going to continue to rise, that's only going to solidify that uptrend even further. So when we get that gut-wrenching pullback, that's going to be a higher low, an obvious buying opportunity within an uptrend, just like this was back here. As I quoted, the buying opportunity of a lifetime was when we back tested this trend line. It's the same thing. We're still rising in that uptrend. If you did buy during that back test, well, so far you look like a genius, right? But the point is, you got to be selling soon. Like, you already need to be selling, right? Like, this is already getting to the frothy part of the market here. Not to say that these markets can't rise into another bullish cycle, and that may likely be taking shape now, but not before a major knockback. And so where is the money to be made on that knockback? Well, it's on the short side, but really, it's in the VIX. The VIX is setting up to be literally a life-changing trade, especially if you're using options here. Now, what I see on the VIX is something that you do not see too often. And you can kind of just see that looking at the chart, right? This is monthly candles here. It's like, when have you seen the VIX look like this in the past, 4 or 5 years, going back to 2014? Like, this is aggressive downside motion. That's what I see. And I'm not saying it can't go lower. In fact, I do think it's going to go lower. That's exactly what I think. But there's no guarantee it's going to go lower. And the place that it's in right now is an obvious place where you want to start accumulating shares or call options on the VIX right here. Because I do think the knockback that's coming is going to be something that's going to cause the VIX to do something similar to this. Maybe not quite as big as this move here that occurred in March 2020. Maybe not quite that big, but honestly, comparable. And look how much the VIX moved, right? It's down at $12. It moves to $85. If you're holding call options, you literally could have just turned $500 into $10,000. Like, this is kind of the trade that I'm talking about. And so then what did you do? If you turn $500 into $10,000 on this VIX trade, then what do you do with that $10,000? Well, then you literally just buy the market at the dead bottom, because what is the market doing when the VIX is all the way up here? It's March 2020. The market is at the absolute bottom. So this is what I'm talking about. This is the trade of the lifetime, the double whammy trade of the lifetime. This is where you start accumulating on the short side, and you're accumulating on the short side knowing that you're going to make a ton of money on this next knockback that is going to be money you can now put in the long side. So that's really what I'm seeing taking shape here. And there's so much confluence. I really think when I look at the DXY, the obvious place this thing is heading is the inverse 702. That's where it's going to head. So this is all upside for the markets. Now, this could happen quickly, because look how big some of these candles are on the DXY. We're talking about the month of May here. We're talking about a single monthly candle potentially getting down into this area, which is major upside for the broader market, obviously. But then something hits, something bad hits, right? That's where that scary nightmare stuff comes in that golden pocket area, that high probability of reversal area. That's what we have to be kind of preparing for. I think it could have something to do with the debt ceiling, honestly, because we had some news on that, and it's like they could really push the envelope with not dealing with the debt ceiling until the last second. That's the exact type of thing that would cause major panic. And there's also complications with what's going on with interest rates too. So what happens on May 3rd, when Powell comes out and he does his next interest rate announcement, that's going to be super relevant to what happens with the debt ceiling, because realize the Democrats essentially want to raise the debt ceiling, right? So like, look at all the stuff, right? Why the GOP wants to keep pretending that the debt ceiling is real. It's like, what? And then like the risky gamble of Kevin McCarthy's debt ceiling strategy. Okay, let's just say the Republicans offered, a bill, right? So far, the bill hasn't passed. I don't know if it's been rejected or if it's in that process. Basically, it's going to get rejected if it hasn't already got rejected. The bottom line is the Democrats want to raise the debt ceiling. The Republicans won't let the Democrats raise the debt ceiling until certain conditions are filled. All the while, interest rates are almost at 5%. It's like, you can't raise the debt ceiling when interest rates are at 5%. You either got to stop raising interest rates or what, I don't even know. Like, literally, I don't know how Like, I don't understand, like, how this is all going to work. Like, you understand the simple idea of, like, obviously if interest rates are at the rate that they're at, and you raise a debt ceiling, well, you're going to have to raise a debt ceiling in like 2 more weeks because we're talking about over $30 trillion at 5%. I mean, you're talking about like $1 million an hour that you have to pay to service that debt, right? So it's like, okay, none of this makes any sense. There's going to be some kind of issue with this, and I think the issue will put downward pressure on markets. It's kind of the perfect storm for a VIX spike. That's what I'm trying to say. That's the way I see it. And it's not to say that everything won't be fine in the end, and like, you know, they're going to maybe they're probably going to raise the debt ceiling and lower interest rates and blah, blah, blah. Like, they're going to do the most predictable thing of all time. But they're going to wait till like the last absolute second. And I think that's what could cause some type of panic in the market, cause the VIX to spike. Because all that fundamental macro stuff aside, you know, real world factor stuff aside, you look at the charts and you see clear targets. You see the DXY closing below the 0.5 inverse Fibonacci. It's making its way down to the 702. You see the S&P 500 closing a monthly candle above the 0.5 Fibonacci. It's making its way to the golden pocket. These are 2 reversal points. DXY heading to a reversal point to move to the upside. S&P heading to a reversal point to move to the downside. You look where the VIX is and you're like, this is free money right here. This is free money. And think about this. This is not like, you know, you just accumulate one time and then you cross your fingers and wait for the thing to spike. We don't know when it's going to spike. We don't know how long it's going to take before this thing spikes. But at this point, this is the safest, most profitable trade to start accumulating. It's the VIX. I'm talking VIX calls. I'm talking VIX shares. I technically use, just show you guys what I'm actually doing, I use the UVXY to trade the VIX. That's the vehicle that I use to trade the VIX. So look at the UVXY. Look at it. This is hilarious. This is hilarious, kid. Look at this, right? Just look for yourself. What do I need to tell you? What do I need to say? Like, this thing, like, they're going to have to do like a reverse split soon, right? Because like, how much lower can it go, really? That like, it doesn't even register on the RSI on a monthly chart here. The point is, if you're holding call options on this thing, or even holding shares on this thing, you stand to gain sick amounts of money when this market has its next panic moment. And I believe that's just overdue. That's coming. I think it's likely to come in May. Don't forget what happened in May of 2021, right? Remember what happened in May of 2021? That's when the crypto market had its major crash. May is a time when markets can show significant weakness. And when you look at the VIX, you're like, this thing is running out of room to the downside here. It's like, it's an obvious signal that the market is getting frothy. Not to say it can't move higher. It definitely can move higher. And I actually think it probably will move higher because it's now in that area where the golden pocket is going to be the only resistance. We've already cleared through a lot of the resistance here. So it's like you're kind of free to roam to the upside. You can basically float upwards until something happens. I don't think the market is just going to move down for no reason. I think it's more likely to move up for no reason. You see what I'm saying? It's going to move up for no reason until something bad happens. Maybe it has to do with the debt ceiling or something else. And you're coming into that high probability of reversal section. And this is where you accumulate shorts. So obviously you can short these instruments as well using the options market or just buying shares short, whatever you want to do. But I think the obvious, like, epic psycho trade of a lifetime, part 1, is buying call options on the VIX. When those call options blow sky high and everything else is free, like crypto is, you know, let's see, like, where could Bitcoin be with the VIX spikes? Well, I've already pointed out the obvious place that you want to be targeting here. I think Bitcoin could get knocked back to below 20,000, right around this inverse 702. This is when the DXY is bouncing. This is when the S&P 500 is getting crushed after it got rejected off the 702, something like that. This is when the VIX spikes. This is where you are buying. I'm not talking about Bitcoin specifically. I'm talking about just crypto in general. This is where you're buying and you're using all the money you made on this VIX trade. It's obvious. That's the trade of a lifetime. That's the 2023 get psycho rich trade. It's a double whammy trade. First part is shorting the market. We're coming into the moment where we start shorting the market. This is an obvious time to accumulate shorts. We don't know when this thing is going to happen. We don't know when this thing can spike. But one thing we do know is that apparently, according to all this kind of, this kind of news and all these things, apparently the United States literally runs out of money in June, I think, right? Like literally in June, the United States runs out of money. So before June or in June, that's kind of an approximate time where we could expect this thing to spike on panic of the debt ceiling crisis, right? This sort of thing could happen. But then what? Well, then I think the market can start rising. And I think that will be partly due to the fact where if the debt ceiling is raised, which it likely will be, like 99% chance it's going to be raised, then interest rates will literally be forced to come down just so the United States doesn't go broke in July, right? Because when you have that much debt, you can't even service it at a reasonable rate when interest rates are anywhere above zero. Like literally, like it's extreme. It's a quite extreme situation. So the point is, the raising of the debt ceiling will inevitably put downward pressure on interest rates, right? And that will set up the market to move a whole lot higher in 2023 through the rest of 2023. But remember what I've said. If interest rates start falling for any reason, well, then you know that you're at the final stages of an upward move. And then it makes sense in this case that interest rates falling would signal a giant crisis, because interest rates would literally be falling because the United States is broke, but they're taking on more debt. So that's a crisis waiting to happen, right? So it's like, it's the same cycle repeating. It's interest rates falling before a horrible event. But at the very point that interest rates start to fall, that's when the market can rise. So what I'm saying is, I'll just draw this to spell it out for you. This is basically what I think is going to happen, right? Something like this. Get into the golden pocket, and then you just get absolutely killed, right? And then if there is to be upside, like at this point, this is where interest rates actually get, lowered or become significantly lower than they are now. This is where the market can just absolutely skyrocket before something horrific happens that sends it, to like pre-COVID low levels or something like this. Like this could end up being a double top. This could even go to the 1.618. I don't know. That we don't know yet. But I do think in the short term, the schematic is pretty clear. We're heading into the golden pocket, and then the market is going to get absolutely crushed, but I think that's going to result in a higher low before potentially one more higher high before the end of this major cycle that we're in here. And this is all going to be incredibly, incredibly bullish for the broader market. So that's what I see. You guys see that? You see the double whammy trade of a lifetime setting up in 2023? I sure do. I hope you see the opportunities, because this is a year where you can get disgustingly rich. Disgustingly rich if you play cards right.